Hello and welcome to the Global Dialogue. I'm Shereen Bhan and joining me now is JPMorgan's Dimon. Thanks very much for joining us here and welcome back to India. It's great to have you back. This is your first visit since the pandemic.
I'm thrilled to be back. It's unbelievable, and so every time I come here, I love coming to India.
And your visit has coincided with the big event that we were all waiting for, highly anticipated, India's inclusion into the JPMorgan Emerging Market Index. So you timed it appropriately, didn't you?
Yeah, perfect. I think it's a great sign they're in the index, and yes.
Let's talk about India since you are here. What's been the impression since this is your first visit post the pandemic? We've just finished hosting the G20. There's a lot of focus and attention on India and its potential as well as the economy. What's your first impression of being back here?
First of all, I love coming here. I've been coming here since 2005. We've gone from 6,000 employees to 60,000 employees. They travel the world, and it's not call centers anymore. It's everything, technology, analytics, cyber. It's extraordinary. Tomorrow I go to a new Mumbai center with 10,000 people. And then look at this conference. I remember 8 years ago or 9 years ago when it started, it was like 50 or 75 clients. Now it's 700 investors from around the world. 70 companies or 100 companies presenting. I think the optimism about India is actually completely justified.
Mm-hmm. Well, what do you believe is driving that optimism today? What would be the 2 or 3 things that you believe are driving the confidence and the optimism in the India story today?
Well, first of all, I think Modi's been doing a very good job, and things like Aadhaar, to get a bank account for 700,000 people, simplifying taxes, trying to open up more for foreign direct investment, the national infrastructure program. But just to give you universities here. So we're not the only bank here. There are lots of the banks with a lot of people, but so is Accenture, McKinsey, and obviously you have your local, Tata, et cetera. So those things are driving optimism. It's not just because of the complications with China. I think that's an opportunity. I think that some of this optimism would have been there anyway.
So given the opportunity that you see in India, what is that going to potentially mean now for your plans for India? You talked about how JPMorgan's grown here in India, both in terms of the size of the business as well as the headcount. What could we expect from here on?
Yeah, I think it's going to be more of the same. And go to the corporate side, investment banking side of our business. We used to cover 10 to 20 companies here, and we did research on them. Now we cover 150 plus. We used to bank 20 or 30 multinationals coming to India. Now we bank, I'm going to say 500 multinationals. So we help multinationals. And also we bank all your Indian companies in London, Singapore, America, as we help them finance or buy and do M&A. So my guess is next 20 years, that'll just double again.
Just a quick follow-up on the inclusion into the bond index, and there's all kinds of estimates on what that could mean in terms of inflows into India. Anywhere between $25 to $40 billion is the estimate over the next year and a half as the inclusion works its way out. Typically, what's been the previous experience of a country being included in the bond index? What are the implications in the medium to long term?
Yeah, so our folks think it'll be about $25 billion. It has to be bought, so it gets bought over time. But I think it's a wonderful thing when you index like that, what it means about your capital markets, your rule of law, your transparency, your government financing. The indirect effect is more important. What you want is capital, foreign direct investment, both in plant and equities and things, innovative companies and stuff like that. So it's just one more very positive sign.
Speaking of signs, I want to understand from you what your key takeaways about China at this point in time. You were there in May, and you said that the outlook that you had on China was cautious when you talk about the risk rewards at this point in time. How do you feel about China today? And do you believe that we're done with the unraveling as far as the real estate sector is concerned, or we're far from it?
Yeah. Well, I think the far more important, to me, this Ukraine war, oil, gas, food, migration, it's affecting all global relationships, very importantly, the one between America and China. I think America takes it very seriously. I'm not quite sure the rest of the world does. To have a European democratic nation invaded under the threat of nuclear blackmail, and I think there's been a good response, but it's going to affect all of our relationships until somehow the war is resolved. And India is going its own way. They've made their priorities quite clear about national security and what that means. We're still there, and obviously I'm an American patriot, so governments are going to set foreign policy, not JPMorgan. But I'm happy, and I think Americans should stop thinking that China is a 10-foot giant. Our GDP per person is 80,000, theirs is 15. We have all the food, water, and energy we need. We've got the unbelievable benefits of free enterprise and freedom. They're going to have their own issues, and I'm not making fun of them. They are going to have their own issues about demographics and energy and climate, et cetera. I like the fact that the Americans are engaged with them now. Tony Blinken, Janet Yellen, Jake Sullivan, and there are legitimate issues around national security, unfair trade. I hope they resolve them. We don't have to be hostile about it. There are going to be changes. It is definitely not over yet.
So more engagement is what you would like to see?
More engagement, and I understand it's going to cause more, what you call a little bit, it won't be an unraveling. I think it'll just be a change that flows over time about certain trade and investment type of things. And by the way, it's not just America. Every country is looking at what is in national security. Do I have reliant energy lines? Do I need semiconductors from China? Where do I get my rare earths from? The world is. Ukraine woke everyone up to that, and that's a permanent state of affairs now.
The pandemic started to wake everybody up, and then Ukraine accelerated this wake-up call, so to speak. What are the long-term implications of what you're seeing play out as foreign policy changes, as national security weighs on economic and government decisions? The U.S. is rolling out the CHIPS Act, for instance. India is trying to partner with the U.S. to ensure that we have a partnership as far as chips are concerned. How do you see this impacting flows? How do you see it impacting globalization moving forward?
Yeah, I think it's just going to change it. So I don't think it's going to, people say decoupling, there's still globalization. The nations are going to have, companies and nations are going to be making determinations which change those flows. That creates huge opportunity, I think huge opportunity for India, for services and certain manufacturing, and it creates risks. So I'm hoping that political leaders sit down, have these conversations, and make these changes in a way that's not completely disruptive, but is dwarfed by the risk of war and nuclear proliferation and things like that. So I think we have to be very cautious about it, but it's an opportunity for India, and hopefully you're going to seize it. I also think, by the way, it's affecting global relationships. India and America are natural partners. Now you have to be, you're here, so you're between Russia and China, you have to be kind of non-aligned, but we're your best friend. I mean, anyone who doesn't think that through hasn't thought really carefully.
Yes, we can see that. I mean, there's been a lot of back and forth between President Biden and Prime Minister Modi.
And I'm thrilled that they're having those conversations. And I think we've got to do a better job on the trade and investment side.
Okay.
Not just the labor and climate side.
When you say better job on the trade and investment side, what do you mean?
That we should sit down with India and negotiate better trade and investment relationships to open up more markets to both sides. India can let some more competition in here. We can bring in more capital and both of it. So I remember talking to some Indians, after some of those negotiations, it's really great, but what about trade? Right.
Yeah,
you like us a lot, but what about trade?
Fair enough.
Right.
But, since you were talking about risks, let's talk about what's happening as far as the U.S. is concerned. And I was having a conversation with Larry Summers over the weekend, and he says, look, he doesn't believe that higher for longer is necessarily going to be anti-growth, because it fundamentally underlines the resilience that the economy seems to have. Yeah. But you've been cautioning everybody about don't just focus on today, but worry about tomorrow. So what does tomorrow look like?
Well, so I agree with Larry. But he also is quite concerned about it. So if you have higher for longer, but you've got good growth and inflation is kind of contained, that's good. You just have more fighting for capital and people paying up for capital, and the world needs it. It needs it for remilitarization, the green economy, the IRA Act, the CHIPS Act, huge deficit spending, but we need growth. If you actually have stagflation, that's not so good. So I just say, right now it feels good. That fiscal stimulation was extraordinary. The monetary system was extraordinary. That was a global phenomenon, more in the United States and elsewhere. But that's a little bit of a sugar high. And that's a little bit going to go away. And we're hoping we have a soft landing. But all these other things are there. QT, Ukraine, oil, gas this winter, disruption of trade flows. So, I think good leadership on the part of, America, India, China, Europe can make sure the negatives don't happen. But I'm putting myself in the quite cautious category.
In the cautious category, and you just talked about the spending, and I remember you said that we've been spending like drunken sailors. So as the party starts to wind down, and tightening happens and interest rates continue to remain higher, what do you believe are likely to be the adverse shocks that the world is going to have to deal with? Debt, of course, is the big one, and the debt burden. I mean, large continents like Africa dealing with that at this point in time. What will it mean for things like climate transition and the many other SDG goals that we have?
Yeah, I think we got to not get confused around various goals. Unbelievable debt financing and high levels of debt around the world. We don't know the effect of that. And these deficits, other than war, have probably been as high as they've ever been. And like I said, with the highest debt level already. So I put that in the little sugar high category. Spending, government spending is inflationary. Governments can't just simply spend more and more money and think it's not inflationary. But I don't know the effects of that. I mean, like I said, we can have higher rates, a slowdown, but inflation coming down and good growth.
Do you see another rate hike,
I think it's more likely than not, but you know, again, I think people should be prepared for higher oil and gas prices, higher rates, as a matter of just being prepared. You know, you and I can guess what it's going to be. You don't know, I don't know, no one knows, but I think the odds are higher than that, and so, you know, but hopefully we'll get to that. I think the geopolitical situation is the thing that most concerns me, and we don't know the effect of that in the economy. And so but again, I think that the humanitarian part, that's far more important. I think it's also very important for the future of the free democratic world. We may be at an inflection point for the free democratic world. That's how seriously I take it.
So geopolitics, the number one risk that you believe the world is facing today?
Absolutely. We've dealt with inflation before, we've dealt with deficits before, we've dealt with recessions before. We haven't really seen something like this pretty much since World War II.
Yeah, so we don't have a playbook for this just yet.
There is no playbook.
Yeah, and so we don't know what the intended and the unintended consequences of this will be. But let's talk about the banking sector in the US, and especially after the crisis. We hope that it's behind us at this point in time. You're not particularly happy with the way that the regulator has decided to move and bring in norms as far as capital is concerned, and you believe that there should be more transparency in being able to deal with this. What are the implications of those proposals going through?
I don't know. I mean, I think that is a great question. Like, you know, one of the things I think should take place is, what do the regulators want? Do they want the mortgage business inside banks or outside? Do they want credit outside the banks or inside? Do they want diversification or no diversification? So like some of these rules are anti-diversification, operating risk capital, G-SIFI. Do you want American banks to have the same requirements as international banks? Because right now it's 30% more. And you know, there should be cost-benefit analysis, transparency, what we're trying to accomplish. And you know, and I hated to do it. Everyone's going to be yelling and screaming at each other. I wish that work was done beforehand. Now it'll probably take place, and we'll see. You know, they're going to do what they want to do. JPMorgan can't affect that. You know, they'll hear. Everyone's going to put in their comments, and hopefully we end up in a good place.
My last question to you, AI, and you believe that AI is going to be driving JPMorgan's future as well. It's critical to each aspect of your business. What are you doing about it?
Yeah, we have 1,000 people involved in it. AI is as real as they say. We have 300 use cases around marketing, fraud, risk. When we move $10 trillion a day, it's going through AI systems. Every application, every job, every person will be affected. And remember, bad guys can use it too. So we have to be ahead of the bad guys in terms of voice recognition, how they use data to get, and even for cyber. And you know, it's going to be great for mankind. There may be some disruption. I think governments should be prepared to deal with the disruption, but they can't stop AI. And the other thing about AI, it could be around the world, and bad guys can use it too. So probably a very big plus for mankind, but I completely understand people's concerns about the bad side of it.
Well, Jamie Dimon, always a pleasure. Many thanks for joining us here on CNBC-TV18. Appreciate your time.
Thank you.
Thank you so much. Good to have you here.
Great.
Well, that's it then on this edition of the Global Dialogue. From all of us here, goodbye, and many thanks for watching.
Hello and welcome. We are coming to you from the sidelines of the JPMorgan India conference, and we're going to talk about payments. It's an exciting subject, lots of interest here in India, new business models all around. I have with me Takis Georgikopoulos. He's the global head of payments. He's also the member of the operating committee at JPMorgan. Takis, great to have you with us here. It's a pleasure. Thanks very much. Tell us, what's been the experience of the conference so far? You're meeting investors, meeting companies, I assume. What do they want to know? What are the kind of questions you're getting? What's the feedback?
We are seeing investors. We are seeing a lot of the local tech companies. We are seeing a lot also of the US and European multinationals that do business here. And for me, it's my first visit in India post-COVID. And what I see is really a sea change in investor sentiment about India. It's extremely positive, it's extremely bullish. Then there is a whole kind of ecosystem of technology and innovation that I see for the first time in the country. Someone gave me the stat, I don't know if it's true, I heard it in the room. In 2019, you had maybe 1,000 startups. Today, you have 100,000 startups. I don't know if it's true, but again, it's a sign of how much more, how many more interesting things are happening here. So it's great to be here.
Where is India in the payments ecosystem, in the evolution of payments vis-a-vis other countries? Are we far ahead? Are we right up there? I mean, that's essentially what we believe, but you tell us.
Yeah, you are. And as I said, coming here from 2019, it's a big change, right?
Yeah.
So UPI before was, a little bit of a theory. Now it's real and it's everywhere, including in, the stands, people buying stuff for 5 rupees. So it is here. It works really, really well. We've seen the digital adoption being really strong. And what I really like and I find very thoughtful is how you guys started from creating the first layer, which is digital identity, then building payments on top of that, and then building credit on top of that. So I think the way you've done it is quite interesting. It's quite unique. It is government built, but with a lot of private sector support. And from what I've seen in the last couple of days, it also supports a lot of tech and fintech innovation on top of it. So I think it's a very unique model. Maybe Brazil is pretty close, but you guys are up there.
I mean, digital public infrastructure, starting with Aadhaar, UPI, and now, of course, there is ONDC, which is, of course, coming up. But why is this being replicated in other parts of the world as you see it, when you've got a bird's eye view?
Yeah, the problem with payments is it's very, very local, right? So I would say the country closest to India is probably China, both in terms of size and the moves towards digitalization. It's just in China it happened with private companies, right? It was WeChat and Alibaba that started it. And then the ECNY, the CBDC from China, came in to provide a public network as a resilience and an alternative to that. In India, you actually started with the public infrastructure and then the private innovation on top of that. If you go to the developed markets, we have digital currency, like, no one walks around with cash in Europe or the US, but you don't have the same innovation around digital identity and digital payments, nor do you have the same cost structure as the one that you are creating here.
And the cost structure is what is very interesting, but it's also, I don't know, a bit of a pain point for companies trying to make money off payments here in India. So, I mean, tell us, is payments on the B2C side, which you and I kind of use every day with UPI and private companies and their services built on the layer of UPI, is it going to be profitable by itself, or you think companies essentially will have to do other things?
Yeah, so fortunately, my business, JPMorgan Payments, we are in the wholesale business. So we do a lot of B2B payments. We move $10 trillion every day across 120 currencies and 160 countries. So there is always a little bit of margin to be made when you move money in complicated ways, big volumes, etc. When you come in a retail context, like in India, and then payments are free, that, by the way, is not, the free is probably rare and kind of unique to India, but everywhere you see the payment for core infrastructure continues to go down, which increases the barriers to entry, increases the necessary efficiencies. That's why we all invest in the cloud and AI and ML and all of those things to reduce our cost base. But when it is free, you need to think of new revenue streams and new ways to add value to your clients. So my view is, if you want to survive in the payment space, you need to move upstream. You need to think about software as a service, data as a service, UI, UX. How do you add value to your clients? How do you add biometrics, better security, better customer experience, better integration to the kinds of ways in which they use their payments, and be able to charge for that value, not wait to charge for the payment rails, because that seems to be
at zero.
Zero.
Thankfully for the consumer.
Thankfully for the consumer, thankfully for the merchant, not so much for whoever provides the infrastructure.